Good afternoon, everyone. This is your market update. So let's start with US dollar. The key takeaways from Fed Reserve Chair Jerome Powell's overnight speech was that he did not challenge the market expectations for a rate cut in October. But instead, he signaled that the Fed remains on track to ease policy, noting that a weakening labor market could justify a rate cut even if the inflation stays elevated. Powell acknowledged both labor and demand have slowed sharply, raising the risk of further weakness in employment. However, he also cautioned about cutting rates too quickly, which could reignite the inflation, or too slowly, which could cost jobs. Importantly, Powell hinted that with the Fed's balance sheet shrinking from 9 trillion to 6.6 trillion since mid-2022, this round of QT may end soon. He emphasized the need to maintain adequate bank reserve to avoid a repeat of the 2019 money market turmoil. And overall, this tone was mildly dovish, weighing slightly on the dollar as the traders paused recent bullish momentum. So turning to WTI crude oil, price fell to a 5-month low on Tuesday as the oversupply concerns deepened. The IEA latest report raised global supply growth forecast 3 million barrels per day this year and 2.4 million next year, while trimming the demand growth to about 700,000 barrels per day. This widening gap reinforced the expectations of a significant surplus. And at the same time, easing geopolitical tensions and stable Middle East conditions have eroded the risk premiums. Analysts suggest that unless we see positive surplus price in US inventory data or stronger macro numbers, the oil prices are likely to remain under pressure within a lower range. And finally, gold continues its powerful rally, though this time the buying is more global than domestic. For much of the year, US investors were net sellers, so they take profit as the price rise. But since the Fed begins the rate cut cycle, gold broke about 3,700. US retail investors have returned to the market. While some call it a depreciation trend, this bull market is broader, fueled by strong physical demand worldwide amidst the persistent inflation and concerns over the fiscal imbalance. The precious metals are once again proving their strength as stores of value. So that's all for today's review. Thank you for tuning in, and I will keep you updated on the market trends ahead of the Fed's next move.